Wedbush securities analyst Dan Ives joins us here at Post 9 to discuss some of those figures. I suppose we should start with Apple. You seem reasonably good enough for now is the expression that has been used a lot. Does that make sense? That, in my opinion, was as bullish as Cupertino and Cook could have made it before the iPhone 16 cycle had started. Not just in terms of the guidance. China is starting to turn into a tailwind, and I believe this is their final quarter of negative results from a year-over-year trend. Take a look at services, they seem really reliable to me. Call it a 9.8 relative on a scale of 1 to 10, and that's why I believe this company can weather the current headwinds. It's difficult to be pessimistic about Apple entering what I see as an A-driven supercycle for the iPhone 16. Will that strength be debated against the concerns of the macro consumer that we just discussed for 10 minutes? That's the argument, you see, but I'll be in Asia once more this week, and from what we've seen, we started with 80 million units for the iPhone 16 and are now up to 90. We've discussed this a lot, so it will be a balancing act. However, I think the story of the AI revolution is still intact when it comes to the data, the quarter, and what you saw from Microsoft and Azure. You look at what you saw from Google and what you saw from an AWS standpoint for Amazon. And all of our checks, despite the market's shaky performance, now is not the time to worry. According to the *FT*, Elliott Management recently informed investors that Nvidia is in a bubble and that the excitement surrounding AI technology is not being matched by reality. I know you disagree completely. Relative, I couldn't disagree more. We were here prior to conference calls and earnings, and I believe we even discussed it. Let's examine the numbers. Have a look at the Azure acceleration and the AMD discussion Lisa Su gave. Regarding the acceleration that Azure is directing for the second half, we observed what we perceived to be unsatisfactory. This is where the monetization is discussed in detail. Look, the haters haven't stopped hating, in my opinion. For the past few years, the bears have been there. We don't see it because it's not just from the call, but I understand that it's simple to come out and sort of yell fire into a packed theater intact right now. You see that the buzz is matched by the value. Nothing we saw here in any way refutes my belief that the street is underestimating the trillions of dollars in AI capital expenditures that will be made across the tech industry over the next 3 to 4 years. You're right, Dan, none of them are abandoning their capital expenditure plans. I'm referring to AWS, which has actually accelerated its revenue growth by 19%. However, there is still the more significant question of whether you will eventually see that return on investment. Clearly, you think that will be the case. However, what do you observe in terms of upcoming applications that may begin to allay some of the concerns that certain investors might have? According to the enterprise viewpoint, which we hear from industry titans like Jensen and Nvidia, the number of enterprises currently on the AI route will increase by 45 times in a matter of weeks. Thus, these businesses are headed toward what I think will be use cases in the fields of retail, insurance, healthcare, and finance. It all boils down to optimization, as we have discussed. The money is there. And I believe that this change is taking place when you consider what Su, Nadella, Sundar, and Jassy discussed. This is only the beginning of the optimization process. I'm not saying that there won't be a gap between capex and revenue, but I think that betting on this and against it would be like betting against Cook and $2.2 trillion in terms of where we see the actual install base in the long run. And you see that Apple is currently undergoing a revolution in AI. That's a risky proposition. Do you think it could last a year? What if it doesn't occur within a year? Will you become anxious if the rhetoric remained the same? I would say that if we sit here in January or February and we haven't seen it, we haven't seen the software optimization. We haven't seen it from a real monetization outside of just the Mag 7, call it second, third, or fourth derivative. And if McDermott shows up and suddenly starts to be against AI, then we have to take a look at it. However, based on what we see, not just from earnings but also from our checks, it's really more encouraging right now. Bill McDermott has never said anything unfavorable about AI. He has, after all, turned around before, and it turns out that even if many people are currently kind of putting fuel on the fire, I'll take McDermott, Su, Nadella, and Cook if they see something. Get your Nvidia keychain quickly for less than $10. we are offering a huge discount exclusively to the first 100 orders. Finally, I'll mention Nvidia. When there are delays with the Blackwell platform, their major clients and partners are aware of it, because design delays are extremely frequent in the business. However, the fact that demand is robust is what counts. Their current platform, Hopper, is experiencing extremely strong demand. Their ecosystem is still thriving. Nvidia is at the center of this still infancy development of digital and AI infrastructure. That's why I still adore that name. What do you believe Nvidia is worth at $984.08 right now, 12 months from now, and 24 months from now? I can't tell you a specific price goal, but I believe the company is worth far more than it is now. However, I would say that what you're witnessing in their clients' environments, in cloud environments, is that clients are investing in Nvidia solutions and reaping the benefits. There is a change in those surroundings within businesses. Digital twins in manufacturing, Nvidia solutions speeding up drug discovery, research on climate sensing, and financial services fraud detection are a few examples. As a result, a wide variety of novel use cases are becoming more popular, and in my opinion, those will be much larger in 12 and definitely 24 months. Nvidia will see that in their financial statements, which will influence the performance of the share price. Currently, Alphabet, Meta, and Microsoft are all relatively inexpensive, but their valuations will increase. Therefore, I haven't done anything in the past several days. As I indicated on the air, I did purchase a small amount of Facebook, or Meta, during the major collapse. However, it hasn't mattered because the market is trading as a single entity, just like during previous volatile times. They fail to discern between exceptional management, entrenched growth, and fortress balance sheets. They are eliminating them all. Therefore, I am unsure of the catalyst. As we said, I believe that the economic data that will be released this week will be the catalysts for the future, because if the data is poor or indicates a struggling economy, it will bring them all to the ground, and that's when you come in. I have nothing to do on such days, which is the reason I dislike the market return at current levels. I don't buy the momentum, and I don't sell my core names. To fill my positions, which are rather filled, and to find others, I need a true washout of the market. Jimmy the Semis. Look, after the sell-off, Keith Lerner at Truist has upgraded the tech to overweight now. This is one of the places that comes to mind while discussing what individuals find more appealing. And we're going to, let's just take Nvidia. If you look at the performance of semi-name brands this week, Taiwan Semi is up 10.5% this week, while Cadence and TLA, ASML, Lam, Applied, onsemi, Teradyne, and Qualcomm have all had respectable weeks. Nvidia doesn't need to be brought up in every semi-conversation. They're on sale, you see. I don't care which. We can discuss Qualcomm if you don't want to discuss Nvidia. They're on sale, so I don't care. Not that long ago, Qualcomm was worth $230. Now, it is about $165, and the company's prospects haven't really changed in the last 2 months, to be honest. I love it even more here, you know, if you loved it as much as I did when it surpassed $200. I don't care if you get into Qualcomm with me or not, you said, Steve. However, this isn't your day. Hold off for a week or a few days. This is simply where the markets are at the moment. Returning to what I said earlier though, if you enjoy Qualcomm, Applied Material, which I own as